Happy Friday, everyone. Mike Spall here. I wanted to have a quick chat about interest rates after this week's Bank of Canada rate hike and get some answers to some questions I'm sure a lot of you are wondering right now. And no better person to help answer these questions than our trusted mortgage broker, Andrew Thake, who has been working in the industry here in Ottawa for over 15 years. Andrew, how are you doing today?
I'm good, Michael. How you doing?
I'm doing very well, thanks. Great to have
Excellent.
you. Great to have you here. Thanks so much for your time. Let's jump right into it. How
Perfect.
does this week's rate hike affect those looking to purchase or those with a mortgage currently?
Awesome question. Definitely a hot topic. So for those looking to purchase, anyone who's interested in getting into a variable interest rate, their rate, if they had, let's say, applied a week ago versus now, will be going up by 0.75. When we're looking to qualify people for a mortgage, anyone who is looking at going with a variable interest rate, we're currently taking their rate plus 2%. So right now, anyone who's interested in a variable interest rate would be qualifying for less, unfortunately, with that rate increase, because now this new stress test that we have to bring to the table with the rate hike would be directly affecting pre-approval. So anyone who's looking to buy and they're interested in a variable interest rate, now's a great time to get, just a refresher on a pre-approval or get a pre-approval just to see exactly where they fall, as of today with that interest rate change, because it will change those numbers. So anyone looking to buy, definitely something to have top of mind right now is just, where the road ahead is with interest rates, fixed, variable, and whatnot. So we can get a lot of great communication out to clients on that. Fixed interest rates actually have been going down a little bit over the last month, and with variable interest rates, we saw them just go up. So great time for some conversation around that. Anyone who currently has a mortgage fixed rates, fortunately, they're not affected by this, but variable interest rate holders would see that change to the interest rate. And if they have an adjustable rate mortgage, they're going to see that that their payment will be changing. And if they have one where the payment is fixed, so a variable rate with a fixed payment, what they're going to see is the interest component per payment will be changing, and basically more will be going towards interest, which is going to stretch out their amortization. So if they don't want that to happen, now's a great time to call a mortgage broker or call their bank or call whoever started the mortgage just to see about getting some adjustments made to their current mortgage.
Great. So there are options available for people looking to buy. Good to hear. What do you suggest clients who are pre-approved do right now to protect themselves against the current rate hiking environment?
Great question. Great question. The best thing they can do is to get a rate held today, here and now, especially with fixed rates dipping a little bit over the last month. It's an amazing time. If they were pre-approved a few months ago, one, their pre-approval interest rate that they probably had held potentially for 120 days will be expiring soon, but also they may be able to hold a lower rate now, which would actually improve the amount they qualify for based on that stress test, and also, protect them for the next 120 days. So anyone who is thinking fixed or just wants a fixed rate as a backup plan, it's an amazing time to have an interest rate held. We can hold an interest rate without doing a credit check or anything like that. So if anyone just wants that rate held from a protective point of view, but doesn't want to go all the way with maybe the paperwork or the credit check or whatnot, now's a great time to get that refreshed and protect them for the next 4 months.
Fantastic. And finally, as a mortgage broker, what's your perspective on buying right now?
I think right now is an excellent time to buy. I mean, maybe my opinion will sound a little biased because I'm in the real estate world here, but when we look back over the last few years with rapidly climbing house prices, interest rates were low, yes, but it was also stimulating, that busy market. We were seeing bidding wars, multiple offers, calming that. House prices are relaxing a bit. Financing conditions are starting to come back, so buyers can be a bit more protected with their offers. They're able to negotiate, potentially the price, get a home inspection done again. And, even though interest rates have gone up, which over let's say the next 5 years might cost them a few $1,000s more in interest. Well, if you're not having to compete, against 20 other people for the same home and have, that price be tens of thousands of dollars, or in some cases way more than that, more than what they were expecting to pay or hoping to pay, and just go in maybe with no conditions. With that, it's just such a wonderful time for buyers. The sort of the control is back in the buyer's hands, so it's an excellent time to get involved. I mean, historically, we still do have some phenomenal interest rates out there. If we look at interest rates just across the history of Canada, I mean, they were up in the 18% and things like that, a few decades back. So historically, we're still at great low interest rates, and now I would say now's an excellent time to buy, or at least consider it. When we look at, some people say, well, what if the prices drop further, something like that? When you buy real estate, unless you're just thinking about flipping it, you're buying it as a long-term thing. And if we look back, there's been a lot of zigzags over history, especially in real estate. But if we look back, 5 years ago, 10, 15, 20, 50 years ago, we just have to ask ourselves, was real estate costing more or less back then? No, it was obviously way less back then. Well, do you think your house will be, I mean, again, excluding the next 6 months of the next year, in 5 years, 10 years, 15 years, do you think the house will be worth more or less? More? Okay, great. So it's like when you own a stock, there's going to be times it's going up, there's going to be times it's going down. But when we plot that out over the long run, hopefully it's going to be, a nice gainful investment, better than not investing at all. So that's just going to be the idea is look at it as a long-term thing. And with that, I mean, we typically do see real estate as a wonderful appreciating asset.
Great insights, Andrew. I think, yeah, absolutely. I think taking that long-term perspective is definitely key if you're planning on living in a place for, for that long-term period. Definitely seeing inventory levels up right now. So I totally agree with you. I think it is a good time to get into the market. Great insights again. Thanks so much for your time. If anyone has any further questions, I invite you to reach out to Andrew directly. We'll be posting his contact details at the end of the video. And that's all for today. Have a great weekend, everyone, and we'll chat to you soon.
Take care, everybody. Thanks for having me.